Hello and welcome to Questioning the Manager. Today we are joined by James Henderson, who's the fund manager for the Henderson Opportunities Trust. James, thank you for joining us. Now the Trust's discount has been widening this year, so what have you been doing to try and narrow this, and what are your thoughts on the year so far?
Well, it's had a good year over the last 12 months, hot, and the share price has gone up, but it hasn't gone up as fast as the NAV, so the discount has widened. What do I do about that? We as managers of the trust can't control the share price, but what we can do is try and tell the story, and I'm enjoying telling the story on HOT. It's got 55% in AIM stocks, and out of AIM there will be the next generation of small cap winners. So whatever happens with Brexit, whatever happens with politics, all these things, certain smaller companies in the UK will grow in spite of the economic backdrop, and hopefully we've got some of them in the portfolio. Certainly the share prices would suggest that we've got some of them in the portfolio. A company like Blue Prism, which is into robotics, has grown very fast. If it's got it right, it will be a much bigger company in 5 years' time, regardless of politics, regardless of Brexit. And it is that's exciting me, and that's the story I need to tell, and see if other investors find that exciting, and then buy the trust, and the discount will close.
And looking at the trust portfolio specifically, what have you been doing in terms of the companies coming in and out of the portfolio?
Yeah, it's always important to refresh the portfolio. So some of the things that have been successful, we need to moderate the size of their holdings. So I've reduced the Blue Prism a little bit. It became over 5% of the portfolio. It is a great story, but we need risk controls. So when it goes over 5%, I do reduce and keep it at the 5% level. And the share price has gone up after selling a bit of stock. I also need, at the other end, things that become challenged and you begin to worry about. I've been selling. So some of the domestic retail stocks have been reduced. I sold some jewels the other day, for instance. At the same time, there are always new opportunities, and you're just not working hard enough if you don't see them. So you just need to get out and see. And the other day I went to Surface Transforms, which make brakes for the next generation of cars, and it's on the cusp of some substantial orders and growth, so that's come into the portfolio. It's got to be a mix of capital goods stocks like brake manufacturer, to retail stocks, to stocks that are big exporting companies, because exporting companies are benefiting from the fall in sterling.
So the trust is all about finding opportunities with undervalued companies in the UK, and in the UK there's also a lot of negative sentiment towards companies regarding Brexit concerns and the sterling's continued decline. So there must be a lot of companies coming into your interest right now. How do you sift through these opportunities to find the ones that will succeed?
It's important that a company has a franchise that allows it to grow however difficult the environment is. So, for instance, a pharma company, 4D, has some drugs in early stage that could make real breakthroughs in treatment of asthma. This will, if it's right, whatever happens to the background to the economy won't matter. If it's got it right, it will be a substantially bigger company in time. That's one type of company you can look for that just isn't influenced by the economy at all. Quite a few companies will be influenced by the economy, but people are so negative, investors are very negative about the UK at the moment. This means that the valuation of those companies where they're considered economically sensitive has fallen. And it's to those companies I'm looking to buy, but I think you have to move slowly. We don't know what happens over Brexit, and we want to be positioned so if it leads to market weakness, that we've got a short list of things, or that's fallen too far on that kind of concerns over Brexit, that we'll be able to add and bring into the portfolio. But we're waiting with that list. For that list, I'd put a company like DFS. It's not in the portfolio at the moment, the big furniture retailer. It is a good company. It generates cash. It's not in the portfolio. But on a difficult Brexit, and people get very worried about the economy, it's the kind of share that could fall and be weak, and we would be then looking out to buy it because it comes through the other side. Its franchise is strong enough that it would be one of the survivors in a difficult high street.
James, thank you for joining us.
Thank you.